Hey, what's up, everyone? Welcome back to the channel where we break down the secrets to building wealth and achieving financial freedom. Today's video is all about 5 assets billionaires are investing in right now. We're pulling back the curtain to uncover the strategies behind how the wealthiest people on the planet grow and preserve their fortunes. And trust me, it's not just about flashy yachts or private jets. Here's why you should stick around. We're not just covering the what, we're diving deep into the why. These assets aren't just about luxury or status. They're carefully selected investments designed to deliver long-term growth and stability. And here's the best part. Some of these strategies are within your reach too. But wait, there's more. In this video, we'll reveal which of these assets generate steady passive income, how billionaires manage risk like pros, and actionable steps for you to incorporate these ideas into your own financial game plan. Whether you're new to investing or already building your portfolio, this video is packed with practical tips to help you think and invest like the ultra-wealthy. So if you've ever wondered how icons like Warren Buffett, Cathie Wood, or Jeff Bezos strategically invest their money to not just maintain but grow their empires, then this is the video for you. Ready to level up your financial game? Let's get started. Before we dive into the 5 assets, let's talk about a real-life example that illustrates the power of strategic investment. Meet Bill Ackman, a billionaire hedge fund manager and CEO of Pershing Square Capital Management. In 2020, as the pandemic hit, Ackman made a bold $27 million bet through credit default swaps, predicting a market crash. When the market tanked, his investment turned into a staggering $2.6 billion profit. Ackman's story isn't just about foresight. It's about understanding risks, timing, and diversification. While most investors were panicking, Ackman saw opportunity. This approach is key to how billionaires think about assets, calculated risk for outsized rewards. Now, let's explore the assets they're focusing on today. First up on our list of 5 assets billionaires are investing in right now is a classic: stocks. It's no surprise that billionaires like Warren Buffett and Cathie Wood are heavily invested in the stock market. But what's fascinating is how they do it. Spoiler alert. It's not about day trading or chasing the latest meme stock. For billionaires, stocks are about ownership and growth. When they invest in a company, they're not just buying a ticker symbol. They're buying a stake in a business. Take Warren Buffett, for example. His Berkshire Hathaway portfolio is packed with companies like Apple, Coca-Cola, and Bank of America. These aren't random picks. They're businesses with strong fundamentals, competitive advantages, and proven track records. Dividends also play a crucial role in billionaire strategies. Many of the stocks they invest in pay dividends, providing a steady stream of passive income that can be reinvested to compound wealth. Buffett's stake in Coca-Cola alone earns billions in dividends annually, showcasing the power of long-term investment in dividend-paying stocks. But it's not just billionaires reaping the rewards. Let's look at Graham Stephan, a YouTube sensation and financial influencer who turned investing into a wealth-building machine. Graham started his journey with a modest income as a real estate agent, but grew his portfolio by investing in dividend-paying stocks and ETFs. Now, with millions of subscribers, he shares his insights on how anyone can grow their wealth using the stock market. And that's similar to our channel's mission of sharing educational content. Our extensive video library covers everything from effective money management to advanced investment strategies. Be sure to check out our videos. One of Graham's key strategies: dollar-cost averaging, investing a fixed amount in the market regularly, regardless of its highs or lows. This approach has allowed him to steadily grow his portfolio over time, even during market volatility. He also emphasizes the importance of investing in index funds and blue-chip stocks like the S&P 500, which offer diversification and long-term growth. Graham's success story is a testament to how the average person can leverage stocks to build wealth. Starting small, staying consistent, and focusing on long-term goals helped him amass a significant fortune, all while inspiring millions of viewers to do the same. Here's another pro tip. Some billionaires, like Cathie Wood, focus on disruptive innovation. Her ARK Invest funds target high-growth companies in fields like AI, robotics, and genomics. While these stocks carry higher risk, they offer massive potential returns, especially as these technologies reshape industries. Now let's talk about what to do as an investor. Build a portfolio of high-quality stocks. Look for companies with strong fundamentals, steady dividends, and long-term growth potential. Diversify across sectors to reduce risk, and focus on businesses you understand. Remember, the goal isn't short-term gains, it's to own assets that grow and pay over time. Just like Graham Stephan, even small, consistent investments can yield big results in the long run. Next on our list of assets billionaires are investing in is real estate. Billionaires love it because it's tangible, appreciates over time, and provides multiple income streams. But here's the catch. They're not just buying luxury homes, they're leveraging real estate strategically to maximize returns and minimize risks. For billionaires, real estate is about functionality and future potential. Take Jeff Bezos, for example. While he owns stunning luxury properties, a significant portion of his real estate investment supports Amazon's operations, including warehouses and fulfillment centers. This dual-purpose approach not only ensures steady cash flow, but also creates opportunities for property appreciation in areas critical to Amazon's success. Real estate provides unique tax benefits that are hard to ignore. Depreciation deductions, mortgage interest write-offs, and capital gains exclusions make it a tax-efficient investment. These perks aren't exclusive to billionaires, you can leverage them too. That's one reason real estate is so appealing for building and preserving wealth. Here's the secret sauce: leverage. By financing properties with loans, billionaires minimize upfront costs while letting rental income cover the mortgage. Over time, this amplifies returns as properties appreciate and cash flow increases. This strategy also allows them to diversify into multiple real estate types: residential, commercial, and industrial. Think about it. With the growth of e-commerce and urbanization, industrial properties like warehouses and data centers are booming. These aren't just buildings, they're essential infrastructures driving the modern economy. Billionaires also recognize the rising demand for sustainable properties, investing in eco-friendly developments to attract tenants and align with global ESG, environmental, social, governance trends. Now let's discuss how investors can take advantage. You don't need millions to start. Platforms like REITs, real estate investment trusts, allow you to own shares of income-generating properties without buying an entire building. Or, if you're ready to dive in, consider house hacking, living in one unit while renting out the others to offset your mortgage and generate passive income. Real estate isn't just an investment. It's a strategy for long-term wealth preservation and growth. Billionaires know this, and now so do you. The next asset on our list is private equity, a favorite of billionaires because it offers access to high-growth companies before they go public. Think of it like getting a VIP pass to an exclusive event only. In this case, the event is a startup or private company poised for massive success. Private equity is all about investing in private companies or startups. Billionaires like Elon Musk and Peter Thiel have mastered this strategy. Thiel famously turned a $500,000 investment in Facebook into billions after the company went public. These kinds of returns highlight why private equity is so appealing. It's not just about money. It's about being part of something transformative. But private equity isn't limited to startups. Billionaires also use it to invest in established companies needing capital for expansion or restructuring. This approach often gives them significant ownership stakes and influence over the business's direction, leading to outsized returns when the company performs well. So how can a regular person benefit from private equity? Let's imagine a scenario. Meet Sarah, a tech enthusiast who decides to invest $5,000 in a crowdfunding campaign for a startup that develops AI-powered home appliances. At the time, the company is small and unlisted, but it has a unique product and strong leadership. Over the next 5 years, the company grows rapidly, attracting the attention of larger investors. When it goes public, Sarah's initial investment of $5,000 balloons to $50,000, a tenfold return. Remember, investing in private equity is like planting a fruit tree. In the beginning, it requires patience and care. It won't grow overnight. But as the tree matures, it starts bearing fruit year after year. The same principle applies to private equity. Your investment grows as the company thrives. Let's explore the next steps to take as an investor. Crowdfunding platforms like EquityZen and Seed Invest open private equity opportunities to everyday investors, allowing you to invest in promising startups with smaller amounts. Alternatively, explore ETFs focused on private equity for a more diversified and lower-risk approach. Private equity isn't just about money. It's about being part of something big before the rest of the world catches on. Billionaires know this, and now so do you. By the way, if you're enjoying the video so far and want more topics like this, comment the word assets so I know. Next up on our list of 5 assets billionaires are investing in is alternative assets. This is where things get exciting and a little unconventional. We're talking about art, wine, collectibles, cryptocurrencies, and even farmland. Why do billionaires love alternative assets? Because they offer diversification and protection against market volatility. Unlike traditional stocks or bonds, these assets often hold or grow in value during economic downturns, making them a vital part of a robust portfolio. Take François Pinault, the French billionaire behind luxury brands like Gucci and Balenciaga. He's one of the most prominent art collectors globally, owning works by iconic artists such as Picasso and Rothko. For Pinault, art isn't just about aesthetics. It's an investment that appreciates over time, often outpacing inflation. Similarly, farmland, a less glamorous but highly lucrative asset, has become a favorite among Europe's wealthy. For instance, the Danish billionaire Anders Holch Povelsen has heavily invested in Scottish farmland, not only as a means to preserve land, but also to generate steady income. But alternative assets aren't just for the ultra-wealthy. Meet Sophia, a self-made entrepreneur in her 30s who started small. After learning about the growing market for fine wine, she invested 3,000 euros in a wine fund that specializes in vintage Bordeaux. Over 5 years, the value of her investment grew by 80%, thanks to the increasing demand for premium wines. Inspired by her success, Sophia diversified further, putting a portion of her profits into cryptocurrency and fractional art ownership through platforms like Masterworks. Cryptocurrencies also deserve a mention. While highly volatile, they've become a cornerstone of modern portfolios. European investors like Alexander Leung, founder of SoundCloud, have openly embraced cryptocurrencies like Bitcoin, using them to hedge against inflation and tap into the future of decentralized finance. Let's explore the next steps for investors. You don't need to be a billionaire to access alternative assets. Platforms like Masterworks let you buy shares of high-value art, while Vinovest allows you to invest in fine wines without needing a seller. For farmland, explore agricultural REITs to gain exposure to this stable and growing market. And if crypto excites you, start small with apps like Coinbase or Binance. The key is to allocate only a small portion of your portfolio to these high-risk, high-reward assets. Alternative assets offer a unique opportunity to grow wealth while diversifying against traditional market risks. Whether it's a Picasso, a bottle of Bordeaux, or a slice of farmland, these unconventional investments could be your next big step toward financial independence. Finally, we come to the most stable asset on our list: bonds. Billionaires aren't just chasing high returns, they're also focused on preserving wealth. Bonds provide the stability they need to balance risk while generating steady income. Whether it's government bonds, municipal bonds, or corporate bonds, these fixed income investments are a cornerstone of billionaire portfolios. Why are bonds so important? They act as a financial anchor, offering predictable interest payments regardless of stock market volatility. For instance, during the 2008 financial crisis, while stocks plummeted, many investors in high-quality bonds saw consistent returns, proving their value as a safe haven in uncertain times. Take Ray Dalio, the founder of Bridgewater Associates and one of the world's most successful hedge fund managers. While Dalio is known for his expertise in macroeconomic trends, Bonds play a significant role in his all-weather portfolio, a strategy designed to perform well in any economic environment. Bonds form a key part of this approach, offering stability and a hedge against inflation or market crashes. But it's not just billionaires who can benefit from bonds. Meet Mark, a retired school teacher who built his nest egg with a diversified portfolio that includes municipal bonds. These bonds not only provide him with tax-free income, but also support local community projects, creating a win-win scenario. Mark's predictable income stream from bonds allows him to enjoy retirement without worrying about market fluctuations. Another reason bonds are a favorite among the wealthy is their ability to preserve capital. While stocks offer higher returns, they also come with higher risk. Bonds, on the other hand, protect principal investment while providing consistent cash flow, an essential component for anyone looking to build long-term wealth. Now let's dive into how to go about this as an investor. Bonds are accessible to everyone. For low-risk returns, consider treasury bonds or municipal bonds, which often come with tax advantages. If you're willing to take on slightly more risk for higher yields, look into corporate bonds. For simplicity and diversification, bond ETFs are an excellent option, allowing you to invest in a basket of bonds with varying maturities and risk levels. Bonds may not be the most exciting investment, but they are a reliable and steady anchor for your portfolio. Whether you're a billionaire or just starting your wealth-building journey, bonds are a powerful tool for preserving capital and generating predictable income. Let's take a closer look at which of these assets generate steady passive income, how billionaires manage risk, and what actionable steps you can take to incorporate these strategies into your own financial game plan. When it comes to building wealth, passive income is the holy grail for investors, and several assets on this list are perfect for generating it. Here's how. Dividend-paying stocks are a billionaire favorite for passive income. Companies like Coca-Cola and Johnson & Johnson distribute regular dividends to shareholders. Warren Buffett famously reinvests these dividends, allowing them to compound and grow his wealth over time. Up next, rental properties are a classic passive income generator. Monthly rent from tenants provides a steady cash flow, while property values appreciate over time. For hands-off investors, or EITs, real estate investment trusts offer a way to earn dividends from income-generating properties without managing tenants or maintenance. Finally, bonds are perhaps the most stable option for passive income. Interest payments, whether from government or corporate bonds, offer consistent returns and act as a safety net during market downturns. Billionaires don't gamble with their wealth. They manage risk meticulously. Here's their playbook. Let's talk. Diversification. They spread investments across multiple asset classes, sectors, and geographies to minimize exposure to any single risk. For example, billionaires balance stocks with real estate, bonds, and alternative assets to weather market volatility. Next, leverage wisely. Billionaires use leverage, borrowing to invest, strategically. While they amplify returns, they ensure their investments generate enough cash flow to cover debt obligations, reducing risk. Finally, hedging. They use techniques like buying options, holding cash reserves, or investing in gold to offset potential losses during downturns. For instance, Ray Dalio's all-weather portfolio includes bonds and commodities to hedge against economic uncertainty. Now that you know how billionaires generate income and manage risk, here's how to apply these principles to your own financial plan. 1. Start small. Begin with assets that match your budget and risk tolerance. Stocks, REITs, or ETFs are accessible options for most investors. 2. Automate investments. Use strategies like dollar-cost averaging to invest consistently over time. Apps like Robinhood, Vanguard, or Fidelity make it easy to set up recurring investments. 3. Diversify your portfolio. Don't put all your eggs in one basket. Combine dividend-paying stocks, bonds, and real estate for a balanced mix of growth and income. 4. Focus on education. Invest time in understanding how these assets work. Read books, watch tutorials, or follow financial influencers who break down complex concepts into actionable insights. 5. Think long-term. Don't chase quick wins. Adopt the mindset of billionaires by prioritizing investments that grow steadily and generate consistent income over time. By incorporating these strategies into your financial game plan, you can start building wealth like a billionaire one step at a time. And that's a wrap, folks. You've just learned about 5 assets billionaires are investing in right now. From stocks and real estate to private equity, alternative assets, and bonds, these aren't just investments. They're strategies to build, grow, and protect wealth. Now here's the exciting part. Some of these assets are more accessible than you might think. Whether it's starting small with REITs exploring private equity crowdfunding or dipping your toes into bonds, there's a way for you to incorporate these billionaire strategies into your own financial journey. As we conclude, it's important to note that this video is meant to educate you on the various aspects of investing, not to provide specific investment advice. Investing involves risks, and you should always do your own research and consult with professionals before making any financial decisions. Past performance doesn't guarantee future results, so always consider the risks involved. Before you go, let me ask, which of these assets excites you the most? Drop your thoughts in the comments below. I'd love to hear your picks. If you found this video helpful, I highly recommend checking out my next video, which complements this one perfectly. Don't hesitate to share this video. It might help someone else too. Subscribe to the channel. Thanks for watching. And remember, keep learning, keep investing, and keep building your future. I'll see you in the next video.